We start with euro dollar, and usually we start with weekly chart. We can see that the weekly candle formed last week was green, that means bullish, and it engulfed the body of the previous bearish candle. However, it didn't engulf this candle's upper shadow, so I believe that we will have probably a bit more of correction in the euro dollar to the upside, but this correction should be limited. On the weekly chart, we can see that resistance is located in the area of 1.11, 1.1120. This is the 50-week moving average, and also the previous support line and now resistance line, which is connecting the minimums of November 2015 and minimums of this summer. Now we switch to the daily chart. We have the same resistance line here, and also we have an indicator called weekly pivot point. This indicator is very valuable with the weekly forecast. And we can see the blue line, which is located at 109.40. As long as euro dollar is trading above this line, it means that the near-term outlook is more bullish, and that the currency may actually rise to the next levels, so-called pivot resistance levels. They are located at 1.1033, 1.1080, and 1.1174. These are the pivot weekly resistance levels. We can see here this line is the resistance line from 2015 lows, about which we have spoken, and also the pair has come close to another resistance line. It connects the minimums of 2016, and it is located in the area of 1.1050, which is also a resistance for the euro dollar. If we look at the moving averages, we can see that the 50-day moving average went firstly below 200-day moving average and then below 100-day moving average. As a result, these moving averages create a resistance above 1.11, and they add to the view that the ability of the euro to strengthen will be limited. If we look at the fundamental factors for the euro and try to see whether the single currency has its intrinsic strength to get higher versus the US dollar, then we can see that data released in the euro area last week were mixed. There were positive PMIs and German IFO business climate, but a lower German consumer climate and French statistics. The most important data from the euro area this week were already released on Monday, and we can see that the region's flash inflation data for October and GDP for the third quarter didn't show any positive surprises, and as a result, traders won't think that the European Central Bank has many reasons to reduce the amount of its monetary easing. As a result, factors for the euro to strengthen are really limited. It more comes down to what is moving the US dollar this week, not the euro. And here also some small decline of the US dollar, some small advance of the euro is possible, but our ceiling lies around 1.11, 1.1140. The moving averages are on the daily chart, and at this point we believe that new sellers will re-emerge for the euro dollar. As for support levels, they are located at 109.40, 108.90, and 108. This is what we have in mind for the euro dollar. One look at the 4-hour chart. At the 4-hour chart, the pair has managed to rise above the moving averages, the 50 period one and 100 period one. These are simple moving averages. And the next target is 200 period moving average around 1.1090. Support will be provided by 100 period moving average at 109.76.